I'm sure that you know that you can claim GST paid for business purposes only as input tax credit or ITC. But you might have used some raw materials or spent some expenses for business and personal purposes. The GST paid in such cases is known as common credits. Did you know that you can claim ITC in case of common credits? Keep watching this video till the end to learn how you can apportion common credits. Hi everyone, I'm Annapurna from the makers of ClearTax. We offer products to manage GST compliance for more than 3,000 large enterprises and more than 4 lakh growing businesses. We create videos on tackling GST compliance for businesses, so please subscribe to our channel to keep yourself up to date about latest GST changes. Now let's learn all about common credits and how you can apportion them. Let's start with types of ITC. When you pay GST for business purposes, it is considered as eligible ITC. However, when you pay GST for non-business purposes or for personal use, it cannot be claimed as ITC. The same applies to taxable and exempt supplies. When you pay GST for making taxable sales, you can claim it as ITC. And if GST is paid for making exempted sales, you cannot claim it as ITC. Apart from these scenarios, whenever you pay GST together for both business and personal purposes, or for making both taxable and exempted sales, then ITC has to be apportioned based on turnover as per the CGST Rule 42. Now let's see how to apportion common credits under the CGST Rule 42 with the help of an example. The total ITC available for the month is Rs 1 lakh and it is denoted as T in CGST Rules 42. ITC exclusively related to the personal purpose for the month is Rs 5,000 and it is denoted as T1 in CGST Rule 42. ITC exclusively related to exempted sales is Rs 20,000 and denoted as T2. Ineligible ITC as per Section 17 subsection 5 is Rs 10,000 denoted as T3. ITC exclusively related to taxable sales is Rs 10,000 denoted as T4. Total taxable sales and total exempted sales is Rs 5 lakh and Rs 2 lakh respectively. So the total ITC has 4 parts. ITC exclusively related to personal purpose, ITC exclusively related to exempted supplies, ineligible ITC, then ITC related to taxable supplies including zero rated supplies. From now onwards, we'll go stepwise. Step 1. Find out the total eligible ITC. Total eligible credit will be equal to total ITC minus sum of ITC for personal supplies, ITC for exempt supplies, and non-eligible ITC. So the short version would be C1 is equal to T minus sum of T1 plus T2 plus T3. And as per our example mentioned before, the total eligible credit would be Rs 1 lakh minus sum of 5,000, 20,000 and 10,000. That will be equal to 65,000. C1 has to be credited to electronic ledger. Also, you have to reverse the T1, T2 and T3 in table 4B1 of GSTR-3B. Step 2. Find out the common ITC. The formula to find out common ITC is common credit is equal to ITC credited to electronic credit ledger minus ITC exclusively related to taxable supplies. Short version would be C2 is equal to C1 minus T4. So as per the example, common credit will be Rs 65,000 minus Rs 10,000, that is 55,000. This shows the common credit which has to be shared between taxable supplies, personal supplies and exempt supplies. This common credit has to be divided into 3 parts, partly exempted, partly personal, and normal portion. Step 2.1. Find out the ITC related to exempted sales in common credit or D1. The formula to find out D1 will be equal to exempted turnover divided by total turnover multiplied by common credit. So by our example, D1 will be equal to Rs 2 lakh divided by Rs 5 lakh multiplied by 55,000, that will be equal to 22,000. ITC of Rs 22,000 is considered used for exempted sales and must be reversed in table 4B1 of GSTR-3B. Step 2.2. find the ITC related to personal purposes and common credit or D2. Usually there will be many common expenses such as rent, electricity and water bill that are used for both business and personal purposes. Hence, to simplify the apportionment, CGST Rule 42 states that you have to take out 5% of common credit C1 as ITC related to personal use. The formula would be D2 is equal to C1 multiplied by 5%. Thus, as per our example, D2 will be equal to 55,000 multiplied by 5%, rupees 2,750. ITC of rupees 2,750 is considered used for personal purposes and must be reversed in table 4B1 of GSTR-3B. Step 2.3, find out eligible ITC in common credit or C3. C3 is equal to common credit minus ITC related to exempt supplies plus ITC related to personal use. Short version would be C2 minus D1 plus D2. So as per our example, it would be rupees 55,000 minus rupees 22,000 plus 2,750, that is equal to rupees 30,250. Step 3. Calculate the total ITC that you can claim. The formula to calculate the total ITC that you can claim is total ITC equal to ITC for normal supplies plus common credit for normal supplies. Thus, as per our example, the total ITC would be rupees 10,000 plus rupees 30,250, that is equal to rupees 40,250. I hope you're able to understand the apportionment of common credit and arrive at the total eligible ITC claims. If yes, please write clear in the comment section of this video. If not, please ask your doubts in the comment section so that we can clear them for you. Now, let's see how common credit impacts your GSTR-9 or annual return. So, you have to reverse the ineligible ITC and ITC related to exempt supplies and personal use in GSTR-3B. Also, you have to do the same calculations for the whole financial year before furnishing annual GST return in GSTR-9. And if there is a difference between the ITC arrived for annual return and total ITC claimed in GSTR-3B, there will be a refund or interest depending on the situation. Suppose the total eligible ITC differs from earlier calculation. Scenario 1. ITC as per financial year 21-22 annual return is more than actually claimed. The year-end calculations revealed that total eligible credit is rupees 50,000 and difference will be rupees 50,000 minus rupees 40,250, that will be equal to 9,750 rupees. In this case, you can claim ITC of 9,750 in any month before September 2022. Scenario 2. ITC as per financial year 21-22 annual return is less than actually claimed. The year-end calculations reveal that total eligible credit is rupees 30,000 and excess claim will be rupees 40,250 minus 30,000, that will be 10,250 rupees. In this case, you have to add rupees 10,250 to output tax liability and pay interest at 18% from 1st April 2021 till the payment date. With this, you will be done with apportioning common credits. After watching all these steps, I'm sure you feel apportioning common credits is tedious and cumbersome. Don't worry, you can simplify and streamline ITC journey for your business with Clear Max ITC, India's first end-to-end solution to manage ITC claims. Click on the link provided below in the description of this video to get a demo of Clear Max ITC. If you have any doubts about this topic, please mention them in the comment section of this video so that our experts can answer them for you. Do subscribe to our channel for more such informative videos and stay tuned for further GST updates. Thank you.